A man in Florida named Richard was 66 years old when he retired from his position as a regional sales director after 31 years with the same company. His final year of full employment, 2023, had been his best year financially. He had exercised stock options before leaving, taken a severance package, and his W-2 income for that year came to $412,000. He knew it was an outlier. He knew it would never happen again. What Richard did not know, what his human resources department did not tell him, what his financial advisor did not flag, and what the Medicare enrollment packet he received in the mail did not explain clearly, was that when he enrolled in Medicare Part B in 2025, the Social Security Administration would look back 2 years at his income and use his 2023 tax return to calculate his premium. Instead of paying the standard $285 monthly premium that most enrollees pay in 2026, Richard received a notice telling him his monthly Part B premium was $674.40. That is an income-related monthly adjustment amount surcharge, what Medicare calls an IRMAA, added on top of the standard premium because his 2023 income placed him in one of the higher income brackets. Richard was no longer earning $412,000 a year. He was retired. His income in 2025 was $83,000 from his pension and investment distributions. The surcharge was based on a year of income that no longer existed and would never exist again. The Social Security Administration was charging him an extra $4,667 a year in Medicare premiums because of money he had earned 2 years ago at a job he no longer had. And the window to appeal that surcharge, to submit Form SSA-44 with documentation of his life-changing event, was 60 days from the date of the notice. Richard found out about the appeal 7 weeks after his notice arrived. He made it, but barely. Millions of retirees in his situation do not. This video is for educational purposes only and is not tax or financial advice. Consult a qualified professional before making any decisions about your specific situation. My name is Paul Merrick, and this is Don't Die Broke. I spent more than 20 years as a certified financial planner watching good people make avoidable mistakes that cost them everything they worked for. Every week on this channel, I break down the tax rules, the financial traps, and the strategies that protect retirees from the things nobody else is explaining. If that sounds like something you need, hit the subscribe button right now and turn on notifications so you never miss a video. Let me start with the foundation because the Medicare Part B premium structure is one of the most consistently misunderstood pieces of retirement finance. And the misunderstanding usually starts with the 2-year look-back rule. Most people assume that Medicare looks at what they are earning now when it sets their premium. It does not. Medicare Part B premiums for any given year are based on your modified adjusted gross income from 2 years prior. That is the look back. In 2026, Medicare is looking at your 2024 tax return. For someone who retired in 2024 or 2025 after a high-earning final year of employment, this creates an immediate and often shocking disconnect between their current financial reality and the premium the government is charging them. The standard Part B premium in 2026 is $285 per month. If your 2024 modified adjusted gross income was below $212,000 as a single filer, or below $224,000 as a married couple filing jointly, you pay the standard premium. Once your income exceeds those thresholds, the income-related monthly adjustment amount applies and your premium increases in tiers. The tiers for 2026 for single filers are as follows. Modified adjusted gross income between $212,000 and $266,000, a monthly premium of $391.90. Between $266,000 and $332,000, $498.50 per month. Between $332,000 and $750,000, $605.10 per month. Above $750,000, $674.40 per month. For married filing jointly, the thresholds are doubled. These are real numbers. If you are a newly retired person whose income dropped dramatically the moment you left work, those numbers can represent a surcharge of between $1,200 and $4,667 per year above the standard premium, based entirely on income you no longer have. Now here's the mechanism that makes this fixable. The Social Security Administration has a formal appeal process specifically designed for this situation. It is called the Income-Related Monthly Adjustment Amount Life-Changing Event Appeal, and the form is the SSA-44. The appeal allows you to request that the Social Security Administration use a more recent tax year, specifically a year that better reflects your current income, rather than the 2-year-old return that triggered the surcharge. But the appeal only works if your income decreased because of one of 5 specific qualifying life-changing events. Those 5 events are 1. Marriage, 2. Divorce or annulment, 3. Death of a spouse, 4. Work stoppage, meaning you retired, reduced your hours, or left the workforce, 5. Work reduction, meaning a significant reduction in your income from work, even if you did not stop entirely. 6. Loss of income-producing property due to a disaster, disease, fraud, or other circumstances beyond your control. 7. Loss of pension income due to termination or reorganization of a pension plan. And 8. Employer settlement payment received in connection with an employer bankruptcy or reorganization. I said 5 events originally, and I want to correct that. There are actually 8 qualifying life-changing events under the current Social Security Administration guidance. The most commonly used by retirees are work stoppage, work reduction, death of a spouse, and divorce. Retirement, the voluntary decision to stop working, qualifies as a work stoppage. That is the event that covers Richard in Florida and the vast majority of newly retired people facing this surcharge. The 60-day window is where this process becomes genuinely dangerous for people who do not know about it. When the Social Security Administration sends you a notice of your Part B premium, either your initial enrollment notice or an annual redetermination notice, you have 60 days from the date on that notice to file the SSA-44 appeal. Not 60 days from when you receive it, not 60 days from when you read it, 60 days from the date printed on the notice itself. If the notice sits in a pile of mail for 2 weeks before you open it, your window is already reduced to 46 days. If you open it, set it aside, intend to deal with it, and pick it up again 3 weeks later, you have 39 days left. Missing the 60-day window does not mean you lose the appeal forever. You can request a good cause extension if you had a compelling reason for the delay. But the extension is not guaranteed, and the Social Security Administration has discretion to deny it. The safest approach is to treat every Medicare premium notice as a 60-day time bomb the moment it arrives in your mailbox. The SSA-44 itself is a 2-page form available at ssa.gov. It requires you to identify which qualifying life-changing event applies to your situation, provide the date the event occurred, and attach supporting documentation. For a work stoppage due to retirement, the supporting documentation typically includes a letter from your former employer confirming your retirement date, or your final pay stub showing your last day of work, or a signed statement from you describing the circumstances of the retirement. You also need to provide an estimate of your expected modified adjusted gross income for the current year. The Social Security Administration will use that estimate to determine which income-related monthly adjustment amount tier applies going forward. If your estimate turns out to be significantly different from your actual income when you file your tax return, the agency will reconcile the difference and may adjust your premium retroactively. You do not need a tax return for the current year. The appeal is based on an estimate, and you submit the actual return data later when it becomes available. Scenario 1. Richard in Florida. Retired sales director, $412,000 in 2023 income, $674.40 monthly premium in 2025 based on the 2-year look-back. He files the SSA-44 within the 60-day window, citing work stoppage as his qualifying life-changing event. He provides his retirement letter from his employer and an estimate of his 2025 income at $83,000. The Social Security Administration processes his appeal and reduces his monthly premium to the standard $285 per month, retroactive to the month his appeal is approved. His annual savings, $4,667. Not a refund of premiums already paid. The reduction applies going forward from the approval date, and if approved quickly enough, can cover the full year. Every month he delays costs him $389.40. He found out about the window 7 weeks in. He filed in time. He kept the money. Scenario 2. A woman named Catherine was 64 years old and a retired physician in California. She had sold her medical practice in 2023 as part of her retirement transition, and the sale generated a capital gain of $900,000 but appeared on her 2023 tax return. Her modified adjusted gross income for that year was $1,100,000. When she enrolled in Medicare Part B in 2025, her premium was $674.40 per month, the top income-related monthly adjustment amount tier. Catherine had been told about the income-related monthly adjustment amount by her accountant, but had not been told about the SSA-44 appeal. Her accountant knew about the 2-year look-back. Her accountant did not know about the life-changing event appeal. Catherine's income in 2025 was $140,000, well below the threshold for any surcharge. But she spent the first 7 months of her Medicare enrollment paying the top-tier premium because nobody told her she could appeal. When her financial planner finally raised the issue during an annual review in November of 2025, Catherine filed the SSA-44, citing work stoppage. The appeal was approved, but applied only to December of 2025 through the end of the coverage year. She had paid $4,363 in excess premiums over the prior 7 months that she could not recover because the appeal addressed only future months, not the months already paid under the higher rate. $4,363, gone because nobody told her the form existed and she did not know to ask. Scenario 3. A widower named James was 67 years old in Texas. His wife had passed away in March of 2024. In the years before her death, they had filed jointly with a combined modified adjusted gross income of $380,000, which placed them in the upper income-related monthly adjustment amount tiers. After her death, James filed as a single filer for 2024, with his own income of $160,000, still above the single filer threshold for some surcharge, but dramatically lower than the joint income used for prior years. When Medicare recalculated his premium for 2026 using his 2024 single filer return showing $160,000, his premium was $391.90 per month, not the top tier, but still above the standard rate. James knew he could appeal because a neighbor had mentioned the SSA-44 form in passing. What James did not know is that he had 2 separate grounds for appeal in 2025, both the death of a spouse as a qualifying event and the change in filing status that resulted from that death. His financial advisor helped him file the SSA-44, citing death of a spouse as the qualifying event, documenting the event with his wife's death certificate and an estimate of his 2025 income at $145,000. The single filer threshold for the lowest income-related monthly adjustment amount tier is $212,000. At $145,000 of estimated income, James qualified for the standard premium of $285 per month. His appeal was approved, and his premium reduced by $106.90 per month, $1,282.80 per year. Over a 5-year period, that is $6,414 in savings. It took one form, a death certificate and a written income estimate. The Social Security Administration does not advertise this process. James found out from a neighbor. Catherine found out 11 months too late. Richard found out with 13 days to spare. Scenario 4. A couple named Harold and Patricia were both 65 in Oregon and both enrolling in Medicare Part B in 2026. Harold had retired in 2024 after 35 years as a civil engineer. Patricia had continued working part-time as a nurse through 2025 and planned to fully retire in early 2026. Their combined 2024 modified adjusted gross income was $286,000. Harold's final year of full employment income of $194,000 combined with Patricia's part-time nursing income of $92,000. Their joint premium for 2026 was $498.50 per month each, a combined monthly Medicare Part B cost of $997. Harold knew about the SSA-44 because his colleague at the engineering firm had used it successfully the year before. He filed immediately upon receiving his Medicare premium notice, citing work stoppage and providing his retirement letter and an estimate of their 2026 joint income of approximately $112,000, Patricia's reduced part-time income plus their combined investment distributions. The Social Security Administration approved the appeal for Harold. Patricia, however, was still working when the appeal was filed, which complicated her individual claim. Because Patricia had not yet fully stopped working, her qualifying event, work stoppage, had not yet occurred. Her premium remained at the income-related monthly adjustment amount rate until she fully retired in February of 2026, at which point she filed her own SSA-44 with her retirement date and documentation. The lesson here is that for couples, each spouse files separately. Each qualifying event must have already occurred at the time of filing, and the approval of one spouse's appeal does not automatically trigger an adjustment for the other. Now, here is the part that changes everything for people who are planning a retirement rather than already in one. The 2-year look back is not just a problem you solve after it happens. It is a problem you can anticipate and partially manage before it arrives. If you know you are going to retire in 2026, your Medicare Part B premium in 2028 will be based on your 2026 modified adjusted gross income. If 2026 is going to be a high-income year because of a severance package, stock option exercises, the sale of a business or property, a large Roth conversion, or a distribution from a retirement account, you can model that income now and know in advance what your premium will be 2 years later. More importantly, you can make strategic decisions about timing. If you have flexibility in when you exercise stock options or when you take large distributions, moving that income into a different tax year can change your income-related monthly adjustment amount bracket 2 years down the road. A single large distribution taken in December of 2025 versus January of 2026 shifts which tax year it appears in and therefore which Medicare premium year it affects. I am not suggesting you make decisions solely for Medicare premium purposes. The interaction with income taxes, required minimum distributions, Roth conversion strategies, and capital gains rates is complex and requires professional modeling. What I am telling you is that your Medicare premium is not a fixed cost determined by forces outside your control. It is a number that responds to planning decisions you can make years in advance. Here is your action checklist. 1. When you receive any Medicare premium notice in the mail, your initial enrollment notice, an annual redetermination notice, or any letter from the Social Security Administration referencing your Part B premium amount, open it the same day and write the date printed on the notice on the envelope in large numbers. Your 60-day appeal window starts on that date, not the date you open the letter. 2. If your premium is higher than $285 per month in 2026 and your income has dropped significantly since the 2-year look-back period, go to ssa.gov immediately and download Form SSA-44. The form is 2 pages and the instructions are included. Read the instructions before you fill out the form. 3. Identify your qualifying life-changing event from the 8 categories: marriage, divorce or annulment, death of a spouse, work stoppage, work reduction, loss of income-producing property, loss of pension income, or employer settlement payment. You must have experienced one of these events. The income-related monthly adjustment amount surcharge by itself, without a qualifying event, is not appealable through this mechanism. If your income dropped because of investment losses or because a market downturn reduced your portfolio distributions, that does not qualify. 4. Gather your documentation before you file. For work stoppage, you need a letter from your employer confirming your retirement date or your final pay stub. For death of a spouse, you need the death certificate. For divorce, you need the divorce decree. Do not file the SSA-44 without the supporting documentation attached. Incomplete submissions are delayed or denied. 5. Prepare your income estimate for the current year carefully. The Social Security Administration will use your estimate to determine your new premium tier. If your estimate is significantly below your actual income when you file your tax return, the agency will reconcile and may assess additional premiums. Estimate conservatively but accurately. If you are unsure, work with a tax professional to project your modified adjusted gross income for the current year before submitting the appeal. 6. Submit the SSA-44 by mail to your local Social Security Administration office, in person at the office, or through the agency's online portal if available in your area. Get a date-stamped receipt or a confirmation number. You need proof that you filed within the 60-day window. 7. If you have already missed the 60-day window, do not assume the appeal is closed. Contact the Social Security Administration and ask about a good cause extension. Document whatever circumstances caused the delay. The agency has discretion to grant extensions for compelling reasons, and a well-documented late filing is always better than no filing at all. 8. If your appeal is approved, verify that the adjustment appears on your Medicare premium statement within 60 to 90 days. If it does not, call the Social Security Administration and reference your appeal confirmation number. Processing delays are common, and follow-up is often required. 9. If you are planning to retire within the next 2 to 3 years, run a 2-year look-back projection now. Identify which of your future tax years will be used to set your Medicare premium in each of your first 5 years of Medicare enrollment. If any of those years is likely to have unusually high income from retirement asset liquidations, business sales, Roth conversions, or severance, model the income-related monthly adjustment amount impact and consider whether the timing of those transactions can be adjusted. 10. If you are married and both spouses will be enrolling in Medicare, understand that each spouse has a separate premium determination, a separate appeal, and a separate qualifying event requirement. Do not assume your spouse's approved appeal covers you, or that your combined income from prior years is the only relevant figure. Once you file separately, only your individual income counts toward your individual premium determination. Let me run the number one more time. Richard in Florida, standard premium, $285 per month. His actual premium before appeal, $674.40 per month. Annual surcharge, $4,667. Cause of surcharge, one high income year 2 years ago at a job he no longer has. Appeal mechanism, Form SSA-44, qualifying event work stoppage, filed within 60 days. Outcome, standard premium restored, $4,667 per year returned to his retirement budget. Catherine in California, same surcharge, same qualifying event, same form available, filed 7 months late. Cost of the delay, $4,363 in premiums she cannot recover. Same law, same form, same outcome available to both of them. One knew, one did not. That is not a penalty. That is the Social Security Administration operating under the Medicare Prescription Drug Improvement and Modernization Act of 2003 and the income-related monthly adjustment amount provisions of the Affordable Care Act as codified in Title 18 of the Social Security Act. The form exists. The window is 60 days. Now you know. This is Paul Merrick, and this has been Don't Die Broke. If this video helped you, hit the like button right now. It takes 1 second and it helps this video reach more retirees who need to hear it. If you are not subscribed yet, hit subscribe and turn on the bell so you do not miss the next one. If you know anyone who retired in the last 2 years and is now on Medicare, paying a premium above $285 a month, send them this video today. The form exists, the window may still be open. Leave a comment below and tell me this. Did you know about the SSA-44 appeal before watching this video, or did you find out about it the same way Catherine did? Too late. I read every single one, and the most common questions become future videos. I will see you in the next.